Today, Bitcoin and Ether are in the green after a week of sideways trading. AI-focused cryptocurrencies soar as investors bet on the technology's adoption. And Arad of Solidus Labs weighs in on the latest global regulatory developments in crypto. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies are making a bit of a comeback to wrap up the week. Bitcoin rose about 2%, Ether jumped 2.25%, and Cardano climbed 1%, all by noon Eastern. And even with today's gains, Bitcoin fell by more than 0.5% in the past 7 days, while Ether rose by 1% in that same time. Okay, let's talk about the top stories. Artificial intelligence-themed cryptocurrencies got a boost yesterday as investors placed bets on the future of the technology. Fetch AI rose about 5%, Cortex jumped by 6%, and Singularity Net rose as much as 19%. These crypto tokens are tied to blockchain-based AI projects like supply chain services and AI-powered dApps. Part of what's driving the hype is all the investor attention on Nvidia over on Wall Street. That chipmaker is seeing growing demand for its semiconductors that power AI apps. At the same time, OpenAI's Sam Altman just raised $115 million for his crypto project, WorldCoin. Next, Shaquille O'Neal has finally been served in a lawsuit involving FTX at a basketball game. Shaq had dodged the lawsuit for months for his involvement in the bankrupt crypto exchange alongside names like Tom Brady and Steph Curry. But a process server finally got to him during his coverage at Game 4 of the Eastern Conference Finals between the Miami Heat and Boston Celtics. The plaintiff's attorney told NBC sports platform Pro Football Talk that they watched the previous game, so they knew he'd be outside the broadcast booth. NBC News reached out to Shaq's attorney for comment, but didn't hear back. All right, on to our main story. Solidus Labs just released a new tool to detect insider trading in the digital asset space. Crypto World's Talia Kaplan sat down with Arad, the company's co-founder and chief experience officer. He breaks down how the new tool works and weighs in on regulatory developments in crypto around the world.
Crypto insider trading has been in the headlines recently. In fact, earlier this month, a former Coinbase employee was sentenced to 2 years in prison in what the DOJ calls the first ever crypto insider trading case. Also earlier this month, a former OpenSea manager was convicted in an insider trading case as it pertains to NFTs. And now Solidus Labs just unveiled a new tool to detect crypto insider trading, specifically to monitor decentralized exchanges. So I'm wondering, what inspired this to come about? Why did you feel this tool was so necessary? Was it these headlines, or was it data-driven, or perhaps a combination of both?
Taya, I think you said it yourself. I mean, the two recent enforcement actions and the severe penalties, including jail time, I think indicate the regulators see it as a big problem. And it's not surprising. Insider trading is a big concern in traditional financial markets as well. Naturally, it is in crypto. In crypto, it's further complicated by the decentralized nature of the system. In crypto, what can happen is that even if you monitor your own employees and you have them sign various agreements that they wouldn't sell on their own on assets, that they have insider information based on the work that they do for a crypto firm, it can relatively easily be traded anonymously on a DEX, a decentralized exchange, right? You can just open a wallet, buy right before, let's say there's a listing announcement, and sell a little bit afterwards. As always, it kind of points out that in crypto, this decentralization and openness is a challenge to market integrity and to ensuring that markets are fair. But what you can also see here with our tool is the potential, because most of these trades happen on decentralized exchanges. We have the ability to monitor, just literally blockchain activity, and using our tools, to cross-reference and check a lot of different pieces of data. To identify when there's activity that looks like someone is specifically buying an asset right before it was listed and specifically selling it afterwards. It's something we've been working on for a very long time. Obviously, we've known regulators are very interested in it, long before, these two enforcement actions here in the US that you're referencing, because it's a fundamental challenge to fair markets. Over the past, months and months, we've been building it actually with some of our regulatory partners. It's already being used by some regulatory agencies and some platforms and crypto firms. We thought it was the right time, having battle tested it, to send it out to the market to tell people, yes, it's a big problem, but you can do something about it. And in fact, in some ways, you can do something about it more easily because the assets are decentralized and are on-chain.
So you mentioned some of your clients, like regulators, are already using this new tool. But how does it work exactly? I know you touched on it a little bit, but how are you able to exactly detect this insider trading activity?
There's the secret sauce, but at the end of the day, it's about monitoring a lot of different kinds of data at the same time, and cross-referencing to identify suspicious anomalies. In this case, as you can imagine, I'm sure the audience can imagine, it means monitoring particular trades of particular assets in relation to news events, in relation to listing announcements, and other particular incidents that would often allow, if not monitored, insider trading, and essentially alerting once enough evidence is collected that there's suspected insider trading here, at which point, it's the responsibility of the platform or a regulator to investigate it.
At the end of last year, Solidus Labs released a comprehensive report on crypto scams, including rug pulls. We talked extensively about that report at the time, and you noted that every 4 minutes, a new rug pull is deployed. Well, now here we are a few months later, and next month you actually have a new report on market manipulation coming out, and you discuss insider trading, I understand. So what can people expect? Can you give us a little preview on this new report of yours?
Right. So, we're doing constant research on these issues, and as new solutions come out that are able to help us map out some of the problems, obviously it's important for us to, shed light on some of the challenges and also on what is being done and can be further done to address them. We've been researching this for years and are very excited to very soon put out a report that provides a little bit more light on the overarching challenge for the industry. Things like cross-market manipulation of assets, cross-market wash trading is very relevant to the SEC's rejections of spot ETFs, as we understand them. Things like insider trading. So we're going to be covering a lot of different issues. And again, the goal is to constantly provide the industry, our clients and partners, the broader public that is constantly looking at crypto and trying to decide if they want to get involved. And of course, regulators who are trying to make sense of it all and are increasingly introducing new regulatory requirements and rules to provide all of these different stakeholders a better understanding of the challenges.
Let's turn to regulation. EU lawmakers approved the world's first comprehensive framework for crypto regulation last month. So what does this mean for the US? Is it too late for us to catch up here?
I think 2022, but at this point we can say, unequivocally, it was really the year of regulation by enforcement to some degree. And that, of course, has continued into this year. 2023, I hope that it would be the year of legislation. So essentially, legislators, lawmakers putting together new rules, in some cases bringing standards from traditional finance and applying them to crypto, in other cases creating, adding to them crypto-specific adaptations. And that's really what we're seeing with MiCA. It is a watershed moment for the industry because it's the first very large, important economic and political bloc that's providing very good clarity for what they're expecting. However, it's important to say legislation being put in place is just the first step. There's a very long there's a process that, not necessarily very long, but now we're going in Europe into a process, and I was just there actually meeting some of our clients and partners and regulators. Now we're going into a process where the legislation and the regulation that stems out of it is translated into actual compliance programs, into actual rules. It's an opportunity for the industry, and we are working hand in hand with a lot of those firms in Europe to show the regulator how the rules are translated into a compliance program that makes them feel comfortable. So very excited news from Europe. And what does it mean to the US, to your question? I think, first of all, it's important to say you can't quite compare US capital markets to any other place in the world, or even the US economy, simply by its size and the fact that over 60% of capital in the world is concentrated in US capital markets. So when American regulators might be a little bit more careful, a little more prudent, like you have to keep in mind that there's more to protect here, right? But it's also an opportunity, by the way, for markets like Europe, like the UAE, which is very forward-thinking, and I was also just there, like Singapore and Hong Kong, and those are just a few examples, to try and take a chunk of this new asset class by providing more friendly regulation faster. It's not too late, and I also think that it will, but nonetheless, I think it will take some time. We're going into an election year. It's hard to imagine in the US that, even though there are some really interesting bills that have already been introduced, some of them very smart and I think are not dramatically different from how effective MiCA is, but it's hard to believe that at the moment that many of them would actually be passed. This year and next year, again, we're going into an election year, so it's going to look completely different. It's becoming a very partisan issue, unfortunately, because safe and regulated crypto can be very helpful for everyone, no matter where you are politically. But with all of these challenges, ultimately the US, I believe once it's figured out and there's clarity, is going to be a very, very important market.
Speaking of your travels, you mentioned you were in Hong Kong and Singapore. I know you were also in Dubai, speaking with regulators there on the ground. So what did you discover during this world tour of yours?
So there's a lot happening in a lot of different places, but I think, first of all, the bottom line is that it's ramping up, and crypto regulatory clarity is in some cases it's already there. You mentioned MiCA. There's still a process of turning it into actual compliance programs and requirements, but in some cases it's already there. In Abu Dhabi, for example, in the UAE, there's already very clear regulation that allowed us to put out a compliance playbooks to help our clients understand how to establish their compliance program. It's a really interesting race. Again, at the end of the day, because the US is operating slowly, and because the US at the end of the day has dominated the capital markets industry and the financial industry for so long, other jurisdictions that are very ambitious, you mentioned Hong Kong, Singapore, a few different Emirates in the UAE, even Europe, see it as an opportunity to maybe get some of that, capital markets business through crypto. Because if people here are concerned about being enforced against, even if they spend millions over, doing their best to become regulated, then it's frustrating for them. And ultimately, they're looking for other places where they can do their business and feel more comfortable. So you're seeing all of these different jurisdictions in a bit of a race, kind of trying to approach crypto regulation from different angles and provide clarity, again, that also provides safety to their existing, financial service ecosystems.
Arad also discussed the first set of global rules the International Organization of Securities Commissions unveiled this week, as well as the push from crypto companies in the US to expand overseas amid increased regulatory pressure. You can check out his insight on those topics and more on cnbc.com/cryptoworld. Okay, that's all for Crypto World this week, but we'll be back again on Tuesday after the long weekend. We'll see you then.